recording. Once again, hello everyone, my name is Jordan and you're with the open market session that we're traditionally holding on Fridays. So what's happening in these sessions for everyone who's here with us for the first time? We're going over the report. This is the report that we're sending out throughout the week on daily basis with the trading opportunities and setups we're following. Of course, on the top, you're going to find a few important educational videos that is more or less, those are more or less mandatory, guys, and I mean that for you to watch it in order to understand how we work. Then below we have the watch list. Okay, this is a simple table containing the symbols and images along with the time frames. Then below we have different comments. So this week we had a few very interesting opportunities and setups, and we can go ahead and cover them now. Starting with the Aussie franc weekly chart. This is the cycle we've been working on for a few weeks already. You're probably familiar with it, so let's just recap. This is a double cycle here, and we're expecting pushes to the upside coming after the divergence at the bottom. On the daily chart, it starts to become a bit trickier because from this zone we have hidden divergence, and as you can see, price started pushing lower. And now the question is what we do. Well, first of all, we've been anticipating the buys, okay, and that was very nice delivered. Then this happened here, which is the divergence, and it managed to push lower, created basically this range which was broken to the downside. So now what do we do? The expectation is still for continuation up, and as you can see in that screenshot, there are a few important levels marked on the chart. First of all, the 100% of this cycle lower was broken. That means we're very likely going to reach the 161.8. Lack of divergences, as we can see, momentum is being created, and again that means we're probably going to see further pushes lower. That's more or less good in a way because there is fantastic support zone below, and when we put it together with the 161.8, this level becomes a very sweet spot for possible bullish continuations and for us to look for reversal from this zone basically. Now if we go to the actual chart, this is what we see. This is the level here, and we can see that there is first of all trend line. Okay, we're currently testing this trend line, so that might be the place where the price is going to create a reversal pattern. Based on the 4-hour chart, doesn't look like it. But if we drop to the 1-hour chart, we can already see one-legged divergence. Now this divergence is great, and usually I'll tell you look for break above this level, but when we go to the higher time frames, we see that there is a very good level right there, and if we drop lower, we can see that very same level right there as well. These kind of situations clearly show you where we have support and resistance. So in this case, it becomes a bit tricky if you miss this one, because the high is just a few pips below it, which means you get spike. That would be then a valid reversal pattern, and then you start attacking the buys, but unfortunately, boom, it fails. Okay, now when we put all that together, my idea is for this level to be first of all broken, and to make things even a bit more conservative, we can wait for pullbacks with hidden divergence on the 1-hour chart that we can go ahead and attack. But this level, definitely to see some momentum above it. What do I mean by momentum? Imagine this is the same very strong zone. You can see how the price is breaking below it. Okay. That being said, in my opinion, we're still going to see either ABCD pattern here or a range, most likely ABCD pattern, and then continuation lower to these levels, which is where from we can look for the next possible opportunity. Come on, next on the list, Aussie Kiwi. Monthly range, weekly cycle inside this range, daily chart breakout, and since the breakout looking for buys, momentum is being created. We've been following this level right here to be broken, and if it would be broken, we wanted to see convergence, which is currently not there, and this part I really don't like, because now we start to get daily bearish pressure. Even though the momentum inside this part is very strong, just like we had it here, but you can see what happened afterwards. So the first level we need to pay attention to is this one, and if we drop to the lower time frames, we are going to see a few things. First of all, there is a structure developed, and this structure, in my opinion, is very close to possible completion of a cycle here, which means in the short term we should be seeing corrective patterns. If we go to the live chart, you can see that we are getting this one final push most likely here, and once that happens, we have the trend line as well, we can start expecting deeper pullbacks. How does it work? At least this is how I see it and understand it. When you have breakouts, valid breakouts, the price must push further away from the zone that you're breaking. Well, not you, the pair, the instrument. And in this case, this is exactly what we get. So further continuation here makes all the sense in the world, especially since we have trend line and hidden divergence on the way. So let it develop, let it create one more push higher, push the price upwards, the higher the better, and then the pullbacks could be also traded for possible sells. Later on, of course, very likely we're going to switch to the buys. So that's about Aussie Kiwi. Aussie dollar. By the way, guys, if you have any questions, please put them in the question box that you have in your software. Aussie dollar. Divergence with this triple bottom, breakout, pullback, and expectation upwards. Now, I'm going to mention this again because me and Vlad have slightly different opinions on this one. And the difference basically comes from the fact that, first of all, this one is creating momentum. Second of all, we have bearish hidden divergence here. And third of all, we have the higher time frames supporting another push lower towards this zone. So yes, we're under bullish pressure, but having divergence doesn't mean we're going to get reversals. And as you can see, the first spike pushed the price higher, and now we are back to this level. And if I zoom in, I'm referring to this low now. You can see that last week, right here, the pair managed to close below. And this is a very, very significant situation where things might take different turn and simply continue pushing lower. Let's not forget Aussie CAD also was in a similar situation, and we got the breakout there, and so on and so on. So there is correlation between the two. Aussie dollar starts to somehow follow the same pattern here, and this, along with the hidden divergence and the lack of divergences here, means this bearish trend might continue further. Now, in the shorter term, what we're looking for is push ABCD breakout of the trend line for possible continuation. Okay, so keep those in mind. Another thing that I wanted to show on the live chart is this level, and that level, you can see what happened. Very strong, without even the price stopping here, it went lower. And here I don't see any confirmations in terms of divergence forming inside this leg. The only one we have is hidden divergence. So careful with the Aussie dollar. It could be very well developing an impulsive move that we can go ahead and later on short, but of course you will be updated about that. All right, CAD franc was shortly removed, then we put it back on the list because of the breakout, and this is the most recent daily pattern that we can work with. As you can see, first of all, we got pretty close to the top. Not ideal, we didn't touch it or false break it, which is the ideal scenario, but still good enough. Divergence is in place, and we can easily expect this thing to push lower. 4-hour chart, trend line. Actually, let's go to the live chart, guys, because I like to see good lines. There we go. Trend line, we had an impulsive move, pullback, and then we got the break to the downside, a retest here, and we are looking for continuation lower. Now, whether this is going to be a simple attempt to create something like ABCD and then push up, which is also a possibility, or we're going to really take advantage of the break, gain the momentum, break below this zone, and start breaking the levels on the way in order to get to the bottom, we still don't know. Why? Because the price is still playing inside the breakout zone. So what we need to see, first of all, is for the price to break this level. That will very likely create the momentum for the pair to start moving deeper and to go south. So CAD franc, in my opinion, remains for sales, and you can even draw the newest trend line once we get a breakout here. All right, next, CAD franc, euro franc. Triple cycle, false break at the bottom with one leg divergence, and we're looking at bullish moves. Critical zone broken, price holds above it, and we can expect continuation higher. So far, so good. However, you can see what's happening right here. We're forming hidden divergence. Yes, it's not reliable since 61.8 of that move was already broken, but it still puts bearish pressure, and we need to just keep that in mind, right? Then dropping down to the lower time frames, we see on the 4-hour chart divergence, and now the push lower started. If we get sorry, that's the dog. If we get hidden divergence and trend line on the way, plus a level, very strong, significant level here, in my opinion, in the short term, that could turn out to be fantastic buy opportunity. Okay, so Euro franc remains bullish at that stage, but let's see again if this zone can hold or not. If it does and the hidden divergence appears, I think we're ready to look for the next buy opportunities. Then we have Euro Yen with this special cycle, with this bullish divergence, and this is where the histogram is, but in my opinion that's the critical level to be broken, which it was. And now the possibility is, and the expectation is for us to see why we don't have Euro Yen. Bullish continuation. Okay. This is what we're talking about. So, as we said, critical levels, the very top where the price tried to break and close, it couldn't. And then we have all these zones below it. What's happening at that stage is the possibility of contracting pattern and one more push higher. Looks like it, feels like it, smells like it. Let's see if we can get it. Of course, for the aggressive setups, you can even try to look for false breaks here with divergences or anything like that. Basically buy around the bottom with very tiny exposure, and if it works, the risk reward is then fascinating. So this one, simple Euro Kiwi remains bullish, but in my opinion we're approaching a very nice interesting level, guys. Let's go back to the live chart. We can close that now. Euro Kiwi. First of all, weekly trend line. Beautifulness. Daily chart. We have cycle number 1, the big one, which is giving us 61, not 61.8, the 100. The big lines, guys, okay? Then we have these previous spikes and support, not support, resistance. We're currently playing right inside of it. Then we have the small one, this one, which is slightly above, coming towards the trend line. And to be honest, that would be the perfect zone and the perfect level for us to attack. Why? Because then the extreme level is in place, it was touched, and it looks better. If that happens, by the way, first of all, we have the first magnet zone, then we have the next magnet zone, again between this one and that one, and this is giving us these two Fibos, okay, 61.8 and the 100 of this Fibo expansion, plus weekly trend line. That in combination with this divergence means a good possible play for the sells. Now, I understand that we have a lot of bullish pressure which is building up inside the euro, and that should be also taken into consideration. But even if there wasn't, that's why we have these magnificent levels that we're trading with. If the level is not there and it's not holding, it means we're probably going to get the breakout, and that's why cut the trade. Okay, it's very simple. Even if you don't understand the fundamentals, if you grasp the concept of bouncing off of levels and breakouts, you will be perfectly fine. So potential divergence, and when we drop to the lower time frames, we see here a very strong momentum. Then the bearish pressure once again. This is the same divergence. So now the question is how this thing is going to react. In my opinion, we're going to see some sort of pullbacks probably, and then continuation. Of course, vice versa, we just spike up. I really don't care which way is it going to happen, as long as it happens, guys. And this sweet spot level is 76.60. To make it a round number, 76.60. Why am I saying I would like to see the pullbacks? Because that will give us the opportunity here to form the 4-hour chart divergence as well, which could be then used as perfect weapon to execute that trade. On the 1-hour chart, we already have this bearish pressure building up here, and on the very last part as well, and that's the low. So expecting at least short-term pushes lower here or here from these two superb levels. Second one, better. Pound franc, 60. Okay. Pound franc, we've been looking for buys during the AVCD correction based on this. Okay. Divergence, no divergence. In my opinion, the pound has all the reasons to continue lower, especially with these fundamentals around the Brexit deal. Let's see. I mean, anyone who's saying anything is probably guessing. No one knows for sure what is going to happen. But after such perfect moves, short-term pullbacks are expected. Of course, mind the levels, guys. And since we broke the 38.2, 50 is the next one on the list, but it's not there yet. So when we go to pound franc, which created here false convergence on the 4-hour chart, it started creating a reversal patterns on the 1-hour chart. It clearly shows the pair needs to take a deep breath before probably further continuing higher. I have no clue, but it requires some sort of pullback. Okay, 100% right here. Let me just draw the Fibo, and you can see the magic. Change the colors quickly. Okay, 161.8 along with the 50 level we've been talking about. There we go. So the idea here is to get the pullbacks, which are later on going to reach that zone. If and when we reach that zone, then we have the first idea for possible impulsive move to be created. Of course, we have fundamentals. Those are the lower time frames. We're not going to strictly rely on that. We need to consider more things into the setup and analysis, but it's just something for us to keep in mind there. Euro Kiwi, Euro dollar, sorry, sells an XRP for buys, 2x correction. Okay, we're going to cover them, but at the end, okay? All right, so pound franc basically started giving weakness, showing weakness on the chart, and this is why corrections are to be expected. Of course, mind the level, guys. And this is the next very critical and important level. So if we go ahead and reach it, it would be interesting for us to trade pullbacks. Pound Kiwi. This is the weekly structure we're working with. Divergence with double bottom, expectation for upward moves. That's the hard time frame weekly. Daily chart broke the divergences and started moving even faster. This is a very interesting level for me. Right here as well is basically the whole zone, right? And we're currently approaching that zone. Now, again, we don't have the divergence, but on the daily, but on the lower time frames, it starts to show weaknesses again. So there it is. This is the level, and that's the bottom of it. And we're currently spiking around the top. No divergence, divergence. That means pullbacks could be now expected and anticipated. And it basically looks perfect. Look at it. So if we consider this like that, we can see that one more push higher is perfectly acceptable. Let's just get these corrections. And again, when we're talking about corrections, guys, those are the aggressive setups. Okay, this is where you should be using less risk. If you want to stick to the conservative setups, the first thing you need to do is go with the trend. And what's the trend? It's bullish, which means selling aggressive. Okay, that's the very first rule you should remember always. Okay, next one is dollar franc, and here for dollar franc, again, I'm not going to agree with Vlad. His idea is 3 higher highs and higher lows for possible continuation upside. In my opinion, and this is the daily, okay, so basically that after this divergence. In my opinion, things are slightly different, and I read it not slightly different, basically completely different. I read it in a very different way, guys. We have weekly resistance which was rejected here, okay? We're still trading inside this pattern. Basically, besides the level, this is giving us not that much information, okay? But when we start dropping to the lower time frames, after the final rejection here, we see this very interesting trend line, which was broken, retested, and now the pair is trading inside the range. So after the breakout, if that range holds, the expectation, in my opinion, is to go lower and get to this zone. And when we go to the daily chart, what Vlad is seeing is once again a structure of 3 highs, 3 lows, meaning continuation after pullbacks. On the other hand, I'm seeing and working first of all with this, which for me is a bearish channel with a false break. And then, since this one was broken and the other one was respected, which is the high here, we can also look at it, both of them perfectly correct and fine. We can look at it as a range, and that range is giving us everything we need in order to sell, which is cycles inside or waves, structure, whatever you want to count it, swings, okay? As long as it's not a straight move that you cannot trade, swing moves inside are perfect. And then the divergences, and then the false breaks. And all of that happened in a perfect liaison here with this bearish bar, and currently the price is holding the top of the zone, and I believe we have a good chance for continuing lower. Trend line on the way currently. So we need to see breakout and of course break below here. But until then, and after this very strong, powerful move, when we compare these two, let's remove it. When we compare those, come on, we can see that first of all, 61.8 is already broken twice. But second of all, and more important, is we lack divergence. We lack divergence in moments when the move starts very strong and this one doesn't have the opportunity to catch up. When it's vice versa, and that usually happens after the divergences, so basically you get the divergence, the second part is very tiny, so then when the price starts correcting itself, you can see how tiny this push is, yet you're able to create hidden divergence already. And naturally, well, not naturally, it doesn't work 100% like anything in the markets, but you can see the push afterwards. And the lack of all these things currently makes me believe there is a very good chance for continuation lower. Of course, if you sold already, this is the place where you should be protecting your capital or cashing out first part or anything like that. Why? Because after all, the trend line is yet not broken. Okay, always protect the capital, guys. In my opinion, of course, it's your money. So you have two different views here. Based on the knowledge you have, guys, it's very important for you to sit down, assess the situation, measure which one is more likely to happen in your understanding, in your analysis, in your trading style. Because if you follow someone blindly, you're always going to lose money. If you try to be someone else 100%, copying his or her trading style, you're going to fail. Get the knowledge, get the theory, understand how things work, but fit them into your, I don't know what's the word for that, but shape them according to your personality. That's the idea. You will never be trading like I do or like Vlad does. Never. It's impossible. Trading is many times subjective, and as you can see, we both use more or less the same methods of trading. Situation like this comes and we have totally different opinions. It happens very rare, but it could happen. That's why you need to stick to your plan and the things you believe work and they bring you money. Never, ever, ever try to copy someone else. You're going to fail because you cannot think like this person in different situations. That's why failure. What can be entry on 4-hour chart, dollar franc? Well, many things could be entries. You could be entering with breakouts, but I would wait for break and close of the trend line. You could be entering with breakout below here. You could be entering on the lower time frame with this breakout right here. I mean, plenty of opportunities. You could be waiting for break, pullback, hidden divergence, retest, continuation, or just retest of the trend line, or the read, or break Fibo if you're not around the computer. So let's say this happens, break Fibo and you have levels to attack, pending orders, protection, sell. Many ways. You can be using software, strategy. Doesn't really matter as long as you have understanding and some kind of sentiment in which direction to trade. If you have that, the entry is not that important actually. All right. Dollar, franc, dollar, yen. weekly range, double cycle, and of course expectation for possible bullish moves. Trend line broken, but now it comes again with hidden divergence. That could be of course seen as convergence pullback or hidden divergence, but if you think about it, it's pretty much the same thing. When you have convergence, it means you want to see pullbacks before buys, and when you have hidden divergence, it means you want to see the price going lower. So the convergence and hidden one are coming together to the same place, and that means short-term bearish is very likely to happen here. Levels, false breaks, okay, divergences on the way, and on the 1 hour chart we have the reversal pattern, which means at least in the short term we should be looking at bearish moves. Where to? This is a potential range, guys. That means, of course, let's go here. If we have the weekly range, okay, the big one, and we're expecting for the price to continue higher, selling aggressive, okay, again, this is supposed to be a correction. Then we have the trend line breakout along with the 4 hour and 1 hour charts, and this is why I'm saying this is a possible range, because assuming we're currently inside leg number 4, yeah, correct, and this starts to develop as it is, we're likely to get spikes on the bottom. Of course, we have one more level here in case it starts to turn into double wave. But the first thing I'm going to look for is to buy the bottom of this possible range. And if no setups are provided and we simply continue lower, I have the next one. This is my next level. And from that point, it could be interesting to look for the buys. Now, why I expect this one to happen first of all? Because if the price gets there, basically here, right, it will be below important and critical levels. It will be below the trend line. And that could play a big role for further continuation lower instead of going upwards. That's why if the big guys want to keep the momentum, the bullish momentum, we should stay around this zone, close to it. We have good levels, we have good support levels, so it should not be a problem to hold the price here. That's Dorian, and I think that was the last one, right? Yeah, now let's go back to the questions. Euro-dollar sells. Sells made based on what? Based on that, probably. Honestly, I'm seeing buys here, possible buys. Once this triangle is broken, what we see lately is bullish momentum on the 4 hour chart and attempts to go higher and higher and higher. And of course, I keep in mind about the weekly situation here. So I'm overall expecting it to continue higher. And the pressure that was built here is more or less perfect for the situation, because the one leg divergence, which is not perfect, but it could work because we had multiple false breaks already. We're going to have a webinar on this, but in summary, it looks good. Now the problem is this is not gaining momentum. This one is, and this one is not. And that's why my idea is to first of all get this breakout, create the momentum once again, or attempt to create the momentum, and start looking for the buys. But until then, I'm not very keen for the sells, to be honest. Yes, it's bearish, trend line and everything, but I don't know, don't like it. Next was a Ripple. There we go, chart loaded for you. So what do we have? This one, holding, level, broken, and that zone, what does it start here? So this is the convergence. We don't have it yet. Drop lower. No trend lines, unfortunately. Level. Two waves down, not sure if you're going to get them. XRP for buys, two waves correction on H4 and H1. Not sure if you're going to get the two waves. Maybe I'm wrong. I hope I'm wrong for you to get it. But definitely agree, yeah. Actually, no, I revised my work and what I said. You have impulse here. So hopefully you get exactly what you need, man. Yeah, agree with you. Could be nice, but it needs to push. And then you even have trend line which you can apply for aggressive entries. What's the next level here? Top, bottom. And $61,100. All right, so yeah, definitely doable. Fingers crossed for you to get it. All right, guys, any other questions about FX or cryptos, or we move on to the other assets? What's happening here? Okay, if anything, please put it in the chat. Next, we have gold. Now, gold didn't really change much. We had the move up the cycle. It remains extremely bullish. We should not forget that. Okay, currently what we're expecting to see is a correction, but this correction being on weekly and daily charts, it means on the lower time frames we can make some money out of it. And the idea is simple. First of all, potentially we're going to form here head and shoulders, multiple false breaks on the top, divergences as well. Need to close that. Boom. And I have a few levels, guys. This is aggressive attempt to sell here. Basically, excuse me, treat it as a range. This is your range zone. And the higher you go to this range zone, the better. If you get anything that suggests a sell, in my opinion, you can go ahead and attack it with protection above this swing here. If that happens, then we have the duplication zone, which brings us around this level. And of course, everything is removed. This is the trend line. And this is the breakout zone at the bottom. Something like that, because this one is a trend line. And it goes lower. So that's the expectation, in my opinion, we should be focusing on in the mid short term. And if we get it, then of course attacking the buys once again. So gold, current focus on these potential head and shoulders, aggressive entries around the top of the right shoulder, and conservative entries breakout. Then we have natural gas, which I really start to like, and I'm going to show you why. First of all, this is the bullish divergence. Okay, perfect, good. Second of all, we have divergence here, breakout, and this is creating the reversal pattern on daily. However, now let's look at it. Impulsive move on the 4-hour chart. And we wanted to see that zone broken in order to gain the momentum for the buys, which it did. Since this thing completed itself, and there is a very good chance we're going to create the very same head and shoulders pattern here, break below should push the price around this level in order for us to see too many lines, in order for us to see this kind of move, which is going to be ABCD. And then we have pretty much a pattern by the book. Impulse, correction in 2 waves, looking for continuation. That's on the technical side. Now, there is something called seasonal trends, guys. I'm not sure if you're aware of it, but let's say, I don't know, shops, gift shops are increasing sales in December. Why? Because we have Christmas and many people are shopping for it. This is a seasonal trend. Or you have flip-flops and, I don't know, beach towels. Seasonal trend during the summer increases, during the winter season decreases because no one goes to the beach. This kind of seasonality is also noticeable in natural gas. Why? Because the consumption for heating and cooking and all that increases during the winter periods. And the storages for natural gas, this is statistics here, are going like this, also by the season. The top of the storage is usually around, by storage I mean companies who are producing gas, they have storages, right? They extract the gas and they store it somewhere. So during the summer period, they're building up that storage, and somewhere around October, it's the peak. Somewhere around February, March, we have the bottom. And this is basically supply demand. When there is plenty of it and when there is less of it, right? Here the price tends to drop, here the price tends to go up. And of course, we're currently in September. The technical analysis are showing that we have pretty much good confirmation also based on that theory. The technicals and the fundamentals fitting together. So, in my opinion, this is a perfect opportunity for us to go ahead and look for buys. Keep in mind that the spike of the price is usually around December. In December, most of the times we're reaching a peak, which afterwards starts to drop. Of course, it could be plus minus a week or two, but September till December, we have a few months where we can be attacking steadily the buys here. So that's about natural gas. Then we have Adidas. Here. Adidas, guys, remains in the same position for I don't know how many days, weeks, months. But the idea is very simple. We had multiple divergences. We had the breakout to the downside, pullbacks, and we're expecting at least one more wave down. We need to see breakouts below that trend line. And now it looks good because we have lows. So it's not just the trend line is going to be broken. Here we also have the lows which broken. If broken, we can be attacking with nice setups. Happy Friday, Doc. Buyer is the next one. Now this is going pretty nice. Basically buying pullbacks, guys. Okay, that's the weekly chart. Structure completed. This is a bigger wave on the monthly with second leg on the weekly. And this is where we got the bullish divergence. It's interesting for us to follow up buyer. To follow up on potential hidden divergence here, by the way, in my opinion, because this hidden divergence might push the price lower. Again, divergence doesn't mean a reversal. When it comes to the weekly chart, this is the reversal point. At that stage, yes, 61.8 broken, but we're still playing around that same zone with the possibility of creating hidden divergence. And then on the lower time frames, we have the convergence already. But look what happened here. So, in my opinion, if we get pullbacks towards here to buy towards there, it would be nice. Whether we're going to get it or not, I don't know. No one knows. We need to wait. And the last one is Deutsche Bank, which has pretty much the same structure. Okay, the double bottom with the divergence, and this is the highest high. It created a reversal pattern. That means pullbacks and continuations are now welcome. If we drop lower, I'm not really able to identify here impulsive move, probably because we're currently inside leg number 3, and this is leg number 4. In order to push one more time to create impulsive move, pullbacks and continuations. Okay, that's the idea, guys. That's what we have on the list. Any questions? You guys are awesome. You get it all. Okay. You're welcome, man. So enjoy the Friday and the weekend, of course. And I'll see you next week. Bye for now, guys.